Hello, and thank you again for tuning in to Leverage Monkey update. This particular analysis, it's July 26th, 2021. This particular analysis I'm going to do it's a unique one. So I'm looking for similarities between past cycles and different stuff like that from what we're seeing now. So, familiar, we had the triangle, and those finally broke out. We have this line here, which is the downtrend line for this downtrend. And right now, we have the breakout to the trend line, and the RSI, I'm on the daily, is starting to hit 70. As you know, above 70 is an overbought signal, but doesn't necessarily mean that it will fall. It can stay overbought for a little while. As you can see here, it can stay in the 70 plus range for some time. So it's a sign that it's getting overbought, but doesn't necessarily mean it's going to do anything. So what I noticed over here was this was 2019 when this is the old all-time high, but here in 2019 it came up and touched what was it, like 14,000, and then it went back down. If you notice here, the RSI was a downtrend line, the same exact scenario that we had from January 6th to now, and it broke out. It broke above it. Here, same thing. It was downtrending, and then it broke above it. The reason why I bring up this particular thing, and it's unique, is people don't know this because they haven't seen it, and I haven't drawn it out. But this right here is a Wyckoff accumulation pattern. That's when the people, whoever it was, brought it down here and then did a Wyckoff accumulation. So as you see here, and this is actually from the peak to here, this was the double wave scenario that people talk about, where it came down and then it went up for a wave, and then it came back down, and people, that was the top, mid-cycle or whatever. They were like, oh, that might have been the top. And then they accumulated here, the whales did, and then they brought it higher. So it's very interesting that they topped it here with the RSI going down, and then they brought it higher. This is a Wyckoff distribution here, which is them distributing what they got here. And so they basically did a top here, just like they did here. They did the top to accumulate. They did the top here and to accumulate. A lot of people thought that this was the Wyckoff accumulation, but based on the RSI, if you look at it, you see the breakout here. It goes up, but then it goes back down and into the accumulation. And if you see the breakup of the RSI here, that wasn't even really a where the RSI got overbought. If you pull it up on pretty much on the chart, it's right here. Basically the same thing we're doing over here. So the RSI declined, it broke out, it peaked, they went into the Wyckoff accumulation. Here, they went into the Wyckoff accumulation. And so a lot of people think that this was the Wyckoff accumulation, but it was an accumulation the structure, at least, the volume was very low, but then it switched to a distribution here, but then it didn't break down. Why? Why it didn't break down? We got like $2,000 of a sell-off on the distribution structure. There's no way that the people that did the distribution structure got their shares back on a $2,000 distribution. And so the thing that I keep pointing to is the liquidity void here and the liquidity void there. That is normally where institutions go to accumulate. So we didn't fill the liquidity voids. Over here, the declining with the spike lines up with our declining and the spike, and then they went into accumulation. And if you look, this particular decline wasn't even the low. The low is way down here. That's where the spring is. So the spring of the Wyckoff. And so we haven't even gotten, according to, if this plays out, we haven't even gotten the Wyckoff, the real Wyckoff accumulation yet in the spring. That's going to be lower. That's going to be in here somewhere. Somewhere in there is where it's going to be. So it's going to spike here, and then it's going to trend down. They're going to start accumulating and then do the spring and then go back up. So it's quite interesting, this scenario, but this comparison of the past with what could possibly be in store for us for Bitcoin. So the other thing that I want to show is the two cycles, the difference between the similarities between the two bull market cycles. So if you notice, there's the 21 week MA, and then there's the 50 day MA and the 200. The 200's in red, the 50's in blue, and the 21's in green. If you notice here, well, let's go back to the other one over here. If you go over here to the old all-time high, when it broke down, you'll notice they stayed below this line as well until they got about here. They went up, they almost touched the line, broke down. Right now, we did the same thing. We went up, we actually touched the line, but we're really overbought. So a pullback just like this could happen. And then it goes and it breaks through the line, the downtrend line, and then it comes back down underneath the trend line, rides along it, rides above it, and rides it all the way down. And then that's when they start accumulating. It's down here. And so, and it's funny, it's if you look at this one in particular too, it came down and tested there before it did that. And then let's see. Oops. Yeah, that wasn't even the bottom. That wasn't the bottom. The bottom's way over here. So yeah, it looks, because this is prolonged. This is about a year bear market. So we're doing the same thing as the year bear market, pretty much. And you can see that it does cross the 21 week and the 50 day. It gets above, and in particular, this 200 day was quite low, so it got its bear cross over here. So it's not quite as similar over here where we got the death cross pretty quick because we were so high up. So yeah, it's quite interesting with the similarities, both between the bear market and then also here with the where they did the come up here, come down, and then accumulated, um, with the Wyckoff accumulation here. The RSI is doing the exact same thing, and there was a spike too, where it went pretty much vertical. Let's look at that. You can see it there. It's quite a vertical rise with quite a bit of volume. And we just did the vertical rise and quite a bit of volume compared to what we were doing prior. It's higher volume than it was. Um, so yeah, this on both comparisons, this is a bounce that's going to be sold, based on those two comparisons, both the bear market and this 2019, July 2019, where they pulled the rug on everybody, and then they did a Wyckoff accumulation. So here they potentially are gonna pull the rug, and then they're gonna accumulate. And the most easy spot for them is the liquidity voids. Liquidity voids are easy for them to get to, but like I said, we did the Wyckoff distribution up here, where the 1 to 6 month coiners bought and FOMO'd in because the media was getting them in. They all bought, and then all longs went over leveraged, and they were saying 100K, 300K, and then they did the Wyckoff distribution and pulled the rug. That's the same thing, that they did over here, where they got people to pump it for some reason. I don't know. I wasn't there, but for some reason it got pumped. Probably the media, and then they dumped it, and then they did an accumulation. So um, it's quite possible that they're gonna do the same thing here, pump it. Um, they're gonna dump it, and then they're gonna do the real Wyckoff accumulation down here, either in the liquidity voids or down here at 20,000 ish. Who knows? We'll start knowing when we see them doing the Wyckoff accumulation structure. So it's not they're not going to be able to hide it really from people who know what they're looking at. And then also there'll be other different things I'll be looking for, as well. But yeah, this looks like definitely not the bottom to me. That's my personal opinion, and my personal opinion is that we're not going to go straight back into bull. I think people that think that are a little bit delusional. We have the SEC going after CBDCs. Tethers, two executives just got arrested for fraud. They might go to prison time. Um, you have FTX lowering their margin ratio from 100x to 20x, so you already get a signal that Wall Street or somebody tipped them off that somebody's going to be coming possibly for regulation on leverage and margin in crypto, because you have to remember crypto is 80 vol and they're letting them people do 125x 100x. It's crazy. It's more than the stock market. They don't let you do that in the stock market on 80 vol. They don't let you do stuff like that. So there's quite a bit of stuff coming. There's no real big institutions buying here because they're still waiting on regulation. The SEC just kicked the can down the road for the ETF. We might get it the Q1 of next year if we're lucky, if they don't kick the can again. And part of it is because they don't even know how basically that companies can do it on their balance sheet and stuff like that. Everything's just a mess because they don't know what to do. So they're working out a plan, but there's going to be tons of FUD coming up. All the big corporations and Goldman Sachs, I think it was, applied for 25% of their funds. In 11 funds, they have upwards of 25% of Bitcoin, and they haven't bought any, next to nothing. I don't think. I think maybe I heard them buy a little bit, but it was like not even 1% or something like that. And then you just have, Kathy Wood at ARK and Michael Saylor's, two small whales, buying. But all the big ones, BlackRock is $8.9 trillion. They want to buy Bitcoin. They bought none. They play with $500,000 in derivatives, which is nothing. Everybody wants to buy crypto. All the big banks and hedge funds and institutions. There's a white paper from Kathy Wood saying that 2.5% in your stock portfolio actually lowers risk and raises your reward. You have stuff like that, and right now they're pretending they don't want it, yet they're applying for it. But you have to watch what they're doing. They're saying they don't want it, but you don't listen to what they say. You look at their actions, and their actions are that nobody's buying it. I think it was BlackRock bought a bunch of MicroStrategy shares, but if you look at the amount of shares, yeah, it's a lot of shares. But if you look at how much it is of a position for them, for their capital, it's very micro. It's very small. And so when you're a big company like that, a big institution, pension fund, you want to get exposure to pretty much everything, but it depends on how much exposure you want. And so nobody's loading the boat with Bitcoin yet, except for Kathy Wood and Michael Saylor's. Everybody else is not. And so I had a discussion the other day with someone else that really institutional adoption is 1 to 3 years away. You know, first there has to be framework with the SEC and all of that for them to even be able to do it. So I hope this isn't a year-long bear market, but it could be. But it looks like with what I showed you, there's some similarities here where they did a Wyckoff distribution mid-cycle. That could be what they're doing here. They did the Wyckoff distribution, and then they're going to do another accumulation somewhere. Matches with what they did on the RSI, and also with the straight up vertical that we're getting here. That was the straight up vertical there. So this could be a mid-cycle pump and dump to get new coiners back in, because I forgot. So I was explaining here. So this was overhead supply. It was what they call overhead supply. So overhead supply is basically you build up a bunch of action overhead, a bunch of people that buy overhead and cost basis overhead, and then you pull it down and you force those people to sell from the pain. And so that's what creates the overhead supply. It's like an avalanche. You have a bunch of snow up on the hill, and you throw a rock, and it sets off all the snow coming cascading down. And that's what we got here, is the cascade. So over leveraged longs, and then 1 to 6 coiners, but they all got exhausted down here. Like I said earlier, they puked $15 billion worth of losses here, over $15 billion. So now we need to replenish the 1 to 6 month coiners, and we need to get the longs to releverage. So what better to do than to do a pump and make it look like it's going to go back into the bull market and get I think it's 45 or 46 billion dollars in stable coins back into Bitcoin and Ethereum, and then the short squeeze as well, get it up there, and then get everybody back in, and then pull the rug, and then do the real accumulation down here, the real Wyckoff accumulation, and then bring it up, and then finally do the actual peak for the market cycle peak. This isn't the market cycle peak. Thanks, guys. Have a great day. Bye-bye.